Well, Melissa, it's good to be with you. I appreciate you inviting me. As you may recall, the traders and I were discussing Tesla over here at the desk, namely how your bull case for the company is $1,400 per share. This person said he would take $1,400, so that is still a fairly bullish price. What business assumptions are made in order to arrive at the $1,400 by 2027 figure? As you saw, Turkey has a facility there. Approximately one-third of our valuation is related to EVs and their scaling. Since this is the new world, many nations do desire a Tesla plant. That's excellent. Everything is coming together. Then autonomous and autonomous taxi platforms account for two-thirds of our valuation. You'll notice that we've been trading Tesla on the margin if you followed our trading, which we do post at the end of each day. We will thus profit as it soars, and everyone is ecstatic about the good news as we transition to electric automobiles. Similarly, while traders and investors start to worry that we're going to be in an air pocket, we believe that most car sales will be electric in 5 years, a tendency that reduced pricing will actually stimulate. We have a 5-year investment horizon. That's the positive deflation, since the cost of electric drivetrains is declining. All right, so in terms of pricing, Tesla has the ability to lower prices if there is a weak spot in the world, which it seems that there is certainly in China and Europe, as well as here in the United States. This is Cathie Wood's final cautionary tale. You heard correctly. Cathie Wood is sounding the alarm, and we're here to explore the full ramifications of her most recent caution. Cathie Wood is a visionary investor whose insight has molded the future of investment methods. Catherine has a reputation for seeing trends before they become popular. Therefore, her opinions are highly respected in the financial industry, and investors pay attention to her advice. In this episode, we'll analyze Cathie's pessimistic forecast and consider the implications for Tesla, the stock market, and innovation in general. We'll explore every angle in our search for knowledge, from the possible dangers of a market slump to the unmatched prospects brought about by Tesla's revolutionary technologies. Please remember to hit the like button and subscribe to our channel before we begin. Greetings from Tesla Stock News. Now, let's get going. Elon Musk, the visionary entrepreneur behind Tesla, the electric vehicle behemoth, has been making waves recently not only in the automotive business, but also in the field of artificial intelligence. Although Tesla's main goal has always been to transform transportation with its stealth electric vehicles, the business has also been secretly creating its own artificial intelligence technology to enhance what its vehicles can do. The full self-driving computer, a proprietary AI chip developed by Tesla, is one of the company's most important innovations in this area. This chip powers Tesla's full self-driving and autopilot functions, allowing its cars to drive themselves with a level of accuracy and dependability that distinguishes them from rivals. However, Tesla's approach to AI differs from those of other industry participants, like NVIDIA, in that it incorporates AI right into the hardware of its cars. Instead of using off-the-shelf AI chips from manufacturers like NVIDIA to power their autonomous driving systems, Tesla has chosen to develop and produce its own AI technology in-house. Tesla gains a competitive advantage in the race towards fully autonomous vehicles thanks to this calculated move, which gives the business complete control over the development and optimization of its AI algorithms. Tesla has made a smooth transition between its AI technology and its electric vehicles by utilizing its experience in both hardware and software, opening the door for a time when self-driving cars will be more than just a pipe dream. However, Tesla's AI venture extends beyond driverless vehicles. The business's AI skills are also applicable to other divisions like energy management and auto manufacturing. Tesla uses artificial intelligence, AI, algorithms to intelligently manage energy usage and storage based on real-time data and customer preferences, thereby optimizing the performance of its energy storage products, including the Powerwall and Powerpack. What does all of this signify for investors then? To put it briefly, Tesla's entry into AI gives a huge chance for development and innovation. Purchasing a Tesla means investing not only in a car company, but also in a future where artificial intelligence, AI, will transform a variety of industries, including energy and transportation. Since Cathie never stops preaching, this is a great chance. Talking about taking advantage of opportunities, you should really read what this has to say about Tesla. It's not enough to merely watch Tesla's phenomenal rise from the sidelines. Seeking Alpha is your one-stop shop for the most recent information on Tesla, Tesla stock price targets, Tesla innovation, and everything Elon Musk related for fans of the company and those who have an eye for finding the next big stock market find. Skip the lamestream media's anti-Tesla rhetoric and get right to the facts. To take advantage of a special discount, click the link in the description. Let's now explore an angle that might deviate from the conventional wisdom. A speaker warns of a potentially harder descent, even though many are expecting a pleasant landing. You see, innovation frequently results in deflation. Wood suggested taking Elon Musk as an example. His price reductions aren't always due to a decline in demand. Rather, they are a result of his profit margin surpassing that of other companies in the automobile industry. He has consistently pledged to lower prices in line with expenditure cuts. It's the innovation cycle in action. Innovation, by the way, is happening at a rapid pace on a number of fronts at once. Think about the 5 platforms: multi-omic sequencing, robotics, energy storage, drivetrain technology, and artificial intelligence that are changing our world. These are all lowering prices dramatically, increasing their effect and accessibility. Let's examine DNA sequencing in more detail. After comparing technological advancements, Cathie claims that with every doubling of the amount of human genomes analyzed, there has been a significant decrease in cost. In a similar vein, industrial robotics are revolutionizing production processes and getting 50% cheaper with every doubling. Remember that the costs of AI and energy storage are also fast declining. However, why do some people still believe otherwise? Well, that depends on your point of view. Despite their apparent price increase, processors' enhanced capabilities far offset the added expense. It's the force of innovation at work, constantly propelling advancement. Cathie went on to say that although NVIDIA may have been the AI chip industry poster child, Tesla's arrival heralds a new era of competition and creativity. And the future is full of possibilities as costs keep coming down on many technical fronts. Therefore, viewers, fasten your seatbelts because the journey is only beginning. It's critical to comprehend AI's overall effects. AI is a key driver of innovation, as our chief futurist Brett Winton emphasizes in our Big Ideas 2023 study. Consider it a catalyst driving growth in a number of industries, similar to the mutually beneficial link between wireless and the internet that the introduction of the iPhone exemplified. But first, let's talk about the big issue, NVIDIA and the larger field of artificial intelligence. It's interesting how opinions on the importance of AI seem to be coming together. In contrast to the early days of the internet, when there were many doubters, AI's significance is still undeniable. This widespread recognition is comparable to the iPhone's revolutionary launch. Investing trends have clearly changed, as seen by the current AI frenzy and the 2014 prediction of NVIDIA's potential. Opportunities abound nowadays, with some people making enormous profits from endeavors like limited edition Tesla vehicles. I was perplexed when Cathie's analyst, Tasha Keeney, brought up GPUs for driverless cars. She confidently said yes in response to what Cathie had requested. As the central nervous system or brains of autonomous cars, she envisioned GPUs as powerful parallel processors that could manage numerous tasks at once and handle data from a variety of sensors, including cameras and radar, much like the intricate world of video games. NVIDIA's stock was only $5 back then, but my how it rose. It rose to the top of both ARKQ's and RK's autonomous technology and robotics fund holdings. Why? Well, because autonomous cars and other forms of robotics are really robots. Additionally, NVIDIA led the robotics movement with vision, deep domain knowledge, and a sharp focus on artificial intelligence, positioning the company at the forefront. But what, exactly, distinguished winners from losers in this field? It all came down to one very important factor: having access to large databases of excellent proprietary data. And Tesla, well, They really got that down pat, especially in the field of driverless vehicles. Looking back, we were all invested in NVIDIA back then. It was a calculated action motivated by knowledge obtained straight from NVIDIA. It paid off that we questioned the things that others weren't regarding genetics and autonomous technologies. Everyone is aware by now that the convergence of several cutting-edge technologies, including artificial intelligence, is essential to the genomics revolution. Many people disregarded NVIDIA's potential in 2014 when its stock was trading at a split-adjusted $5 and saw it only as a manufacturer of PC gaming chips. However, it was evident to us at ARK that NVIDIA was ready to take the lead in AI. In the present day, NVIDIA has experienced an 80-fold increase in value, but the false belief that NVIDIA is the only player in the AI game endures. But the truth is much more complex. Let's talk about the big issue, which is the recent commotion around NVIDIA and ARK's purported exclusion from the stock. It's like the story of Tom Brady not winning the Stanley Cup, only it's not true, the reality. We have invested in NVIDIA since the beginning. It is a major holding in our Robotics and Autonomous Mobility Fund, ARKQ, and it is well represented in a number of our other funds. Let's not, however, get sucked into the NVIDIA hoopla. Too much, too soon. Everyone is wondering this, especially since NVIDIA momentarily became a member of the trillion-dollar market capitalization club. However, it's crucial to keep in mind that there's more to the AI scene than meets the eye in the midst of the chaos. You see, there are other players in the market, even if NVIDIA may be leading the pack. Businesses such as AMD, with its extraordinary expansion, are achieving notable advancements in the field of AI. Not to be overlooked are the tech behemoths competing for a piece of the AI market: Google, Amazon, and Meta. The shocking thing is that NVIDIA is ahead of the curve. Its processors have specifications that beat those of its rivals. That does not imply, however, that NVIDIA is impervious to difficulties. There is a genuine risk associated with companies like Google using their AI expertise. Yes, the AI world is changing at an astounding rate. NVIDIA is only one piece of the puzzle, and despite the flurry of invention, one thing is certain: AI has a bright future. It is very evident that the narrative around NVIDIA's rise is only the top of the iceberg. NVIDIA's story, from modest beginnings to rapid ascent, reflects the broader development of AI and its revolutionary effects on our world. But let's not overlook the significance of the other major characters in this story. Businesses like Tesla are redefining what's possible, and